right off the bat here, let's go straight to the edge of the trading floor and visit with Oliver Sloup with Blue Line Futures, who's keeping a sharp eye and a finger on the pulse of this market here today. Oliver, there's a lot of talk about the corn and the soybean market. Soybeans, of course, because of the potential of more delayed planting or more non-plant. But what about the charts when we see action like this? Let's go to a corn chart here first. I want to get your reaction as to what the technicals are telling you when we see this kind of a rebound.
Well, we talked about it Monday morning with Marlin, and we talked about a little bit of a reversal coming into play, talking about that December contract, 450 to 455, being an area to pull back to. This was previous resistance at the end of May and kind of the secondary breakout point last week. We've tested that here over the last 24 hours and managed to not only hold, but kind of springboard off of that, which is extremely encouraging as we look towards the weekend. Now, the technical resistance pocket that we're looking at going forward, 463.5 to 465. If we can achieve a closeout above here, I wouldn't be surprised to see the market accelerate higher above the recent contract highs of 473. As you'd mentioned, the weather continues to be a bigger and bigger question mark going forward, not only for what needs to be planted yet, but also a big question mark over the yield that is planted. So I still think there's a lot of potential here, not only in corn, but soybeans too, as you had mentioned.
All right, let's look at the corn and the soybean numbers, then we'll come back and get your analysis of this soybean chart as well. Right now, we've got July corn up 7 3/4, 448 3/4, and that new crop December you just mentioned, Oliver, 460 3/4. That's up 7.5. The high, and that's 462.5. Let's go to the soybeans now, and we're double digits higher here with July up 12 1/4, 915.5. The November got as high as 943. We're 2 pennies under that right now, but we're up 12 1/4. So do you see much resistance above here at this 950 level in the Novi?
Well, 950 is a psychological level. The big, I think, thing that you could check off this morning was the fact that we filled the gap from Sunday night, tested and held the 200-day moving average, which is also previous resistance. So that support from 918 to 923 held perfectly. Now we're coming up higher, and as you had mentioned, the weather continues to be a bigger issue. So I think 950 is psychologically a roadblock, but I think we can chew through that, and if we can, I think it opens the door for another 20 cents in a relatively short amount of time. The ace in the hole going into next week is the G20 summit, where the U.S. and China are supposed to sit down and talk about trade. And I don't think anything necessarily is going to be resolved in that meeting, but I wouldn't be surprised to see additional positive headlines or positive spin come out of that and add additional premium to this market.